2, 1. What's up, everybody? On this indicator series video, I'm going to talk about the Ichimoku Kinko Hyo, also known as the Ichimoku cloud, which translates roughly into one glance cloud chart. A quick history on the Ichimoku cloud. A Japanese journalist by the name of Goichi Hosoda, hope I didn't butcher that, developed it after about 30 years of messing around with Japanese candlestick charts and reporting on the rice trade, as a journalist. So it's an interesting story, and you guys should look it up and read about the guy. I think his wife left him because he was so obsessed, and yeah, it's an interesting story. You guys should check it out. Just go to DuckDuckGo. Don't use Google because they track you. Use DuckDuckGo and search for it. Now, this method of trading, it encompasses, from my understanding, reading over the notes, is it was developed using 3 theories of trading. Those 3 were time theory, wave movement theory, and target price theory. Now, I'm not going to go over each one of those theories here. Again, go to DuckDuckGo and look those up. I'll be sure to understand, though, that this is definitely a trend-following method. I have used it in the past, and I have used it for scalping. I've used it for quick price target moves. I've used it for momentum moves. I've used it for all kinds of different things. Because you can. It's actually a pretty cool indicator. Something cool I learned about it is that it's actually all in one, pretty much. It has built-in trade signals, forecasting, stop levels, take profit levels. It's actually pretty ingenious. And if you learn how to use it properly, you can use it for all types of trading, not just for long-term trend trading. You can use it on any time frame, although I recommend you adjust it. You play with it, because those numbers, the 926, right, 926 and 52, they are there for a reason, and they're there based on Japanese work scheduling, right? But it was basically used on the on the daily chart. But I'm getting off track here. I don't want to say that the guy wasted his time all those 30 years. For an all-in-one, it is not bad. The issue that I had with using it as intended, key phrase there, as intended, was that the weights between valid signals are incredibly long, especially on the daily chart. There is, from my trading style and my taste, a lot of whipsaws and a lot of missed opportunity. And the whipsaws you can get, especially during non-ranging markets, when markets are just bouncing around, can be very challenging for any trader, especially, I would say, anybody who's less than 5 years in is going to be challenged to, why would anyone ever use this? Another issue is for some people, and me included, is that it makes the chart a bit messy. Now, you can clean it up, you can tighten it up. You don't have to use everything that's on there, all the separate pieces, of which I'm not going to go over. If you don't know what Ichimoku Kinko Hyo is, go to DuckDuckGo. Type in Ichimoku cloud, okay, and you will find plenty of people. ICHIMOKU cloud. That's the easiest way to type it in, or just type it in right here. Go up on the top there and type in Ichimoku cloud basics, and there's tons of people who will tell you all that you need to know. As a matter of fact, I probably suggest you go do that before you go any further in this video, because I'm not going to really go over it. I'm just going to go over what I did, how I traded it, and that's it. But I'm not going to go through what each indicator does, how it breaks down and all that. I'm not going to do all that because I don't want to. You go learn it on your own. I'm not here to hold your hand. Ichimoku is not as complicated as it looks. I'm not going to explain all the parts. If you want to learn about it, again, plenty of websites and videos on the topic. I will show you how I used this in the past on daily charts. I sometimes, even today, will throw it on a 4-hour chart, or not so much the weeklies, but I like that it's not bad for when the market gets choppy on the 4-hour. I sometimes use it because it gives me a better idea of the smaller momentum moves in between support and resistance levels. Just visually, sometimes I like to see things, so sometimes I'll use it on there too. I'm usually pretty in tune with it because, again, it works off support, resistance, and momentum, which is how I actually trade my own personal accounts, is off that. And excuse me, just had a big old iced coffee. Anyways, so I'm going to show you how I used it. I didn't use it for a prolonged period of time on charts other than the daily. Maybe the last couple of years I spent using it sparingly on H4, especially in the Japanese portfolio, so the Japanese yen portfolio. But yeah, it's not bad. It really isn't. If you understand how it moves and understand what it was designed to do and what each component means, it's actually not bad. I still like it. Like I said, I still use it from time to time. I'll throw it on my charts, especially on the Japanese charts, because it works pretty well once you get down to it. Now, the guy spent 30 years testing it and crafting it on a daily chart, so who am I to tell you to use it on H4 or 15 or whatever? It's your money. You can do whatever you want. But this guy spent 30 years perfecting it, using it on the daily chart. I'm not going to disrespect that because I respect people who go out of their way to try to make something better for themselves and then share it with everyone, which is what he did. He was not somebody who kept it to himself. Anyway, read his story. It's pretty cool. Before I turn on the chart, I do want to talk about some pros and some cons of Ichimoku Kinko Hyo. I like saying the word, so that's why I say it. I'm a bit of a Japanese file. I've always wanted to go. My sister's been there. A couple of my friends have been there. I know I have a few associates who live in Tokyo and Okinawa, Nagasaki. So they always tell me I should come. I hate flying, so it's going to be a little bit rough, but yeah, I want to go. I love anime. I love all that stuff. I think the Japanese culture is fascinating. Most Asian cultures are fascinating to me personally, but that's for another time, another story. Anyways, so I'm going to go through some pros and cons, and these are just my opinion, of course, as always. Pro number one is it is an all-in-one indicator and system. And what I mean by that is if you use it as intended, it's an all-in-one system that has entry and exit levels. It even forecasts a little bit. I'll touch on that in a minute. But you can basically it's the only indicator I've ever seen where if you just used that in the way it was designed with some sound money management, and it is actually profitable. Okay? If that is good or not, if people believe me or not, that's fine. I don't really care. It's my opinion, and I've done extensive testing, and I see that it's okay. Maybe it's not the best, it's not the greatest, but if you just want to throw something on the chart and start learning, I think it's a really excellent tool to learn also. And it is profitable with sound money management once you get your emotions in check, which is going to be a different video, but I'm not going to talk about that here. Now, the first con, though, is in the beginning, especially when you're first learning, I would suggest you only use it on a daily chart. That's what it was designed for. That was its initial intention. And the only reason, I'm not saying forever. I'm saying in the beginning just so you get used to how it actually works and the way it was designed to work. Yeah. Yeah, I'm just going to leave that there. Just use it on the daily chart for a while till you get the hang of how it works and how it looks when and mostly for back testing too. I'm not saying you have to sit there and go a year using it on the daily only if you can't afford to trade daily, or if it's not your intention, or if you can't trade daily, but study it on the daily and how it works so you can see how it interacts with the markets, and do it with any pair or anything you want to trade, because this, again, another pro that won't have a con. I just thought of it now, but another pro is that this is good for anything. It was designed for commodity rice, but it works on everything. It works on foreign exchange. It works on commodities, stocks, and bond charts, and name it. Excuse me. I've actually put it on all the stuff that I trade, and other than like the S&P 500 and gold, yeah, some of the other commodities it works well. But yeah, you can use it on any chart, so that's another good thing. Now back to my actual pros. And the next one would be, once you understand how it works, you can see the whole market in one glance, sort of. And what I mean by that is that you can turn on your charts and fire it up, and right away, without doing anything, you can just click from chart to chart and see tradable, yes or no. Tradable, yes or no. Tradable, yes or no. Within seconds, once you understand and once you create a style of trading Ichimoku, you'll be able to quickly get through it. You know, bam, 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 go through all your charts, right? I got 17, 18 charts that I look through, so you can just zip right through them if you had it on there, right? I just zip through them now because I've been doing this for so damn long. But it is a little bit faster when I put Ichimoku on there every once in a while. Now, a con is your chart can and will look very busy, especially if you add other things to it. If you're adding, an oscillator, there is no oscillator in it, so if you want to add an oscillator and then whatever else, your chart's just going to look crazy. It's one of the reasons I don't always use it. It's the reason I dropped it from, using it as a mainstay of a trading style. But again, I'm not being hypocritical. I still use it on the lower end chart. So on 4 hour, this is the lowest I go. I do like how it is on the 4 hour chart. It helps me sometimes just get a quick visual on how things are bouncing around on the 4 hour. For me, it works for me. And it can be it is a steep learning curve. All the different components, but not really, because it's in all honesty, it's like two crossovers. It's two sets of crossovers, and you'll see what I mean. But it looks busy, but it's not. But it can mess with your eyes. So, and I know a lot of my trader friends are visual. They don't like to see. As they progress as traders, they want less and less on their chart, me included. But yeah. Another pro, and last pro I'll throw out there, is that it's the only time-tested indicator that me personally I've come across that has a predictive aspect to it. And what I mean by that is you'll see in the front of Ichimoku there's always a future cloud that shows you where price can go, or where it may go. And everything else, and what I mean by that, if the cloud is red, then expect the market to go down. Not that it's going to go reach over there, but the market is going to go down. If it's green, expect the market is going to go up. That's not always the case, not by a long shot, but I'll show you what I mean in a second here when I turn on the chart. A con, the last con I'll talk about, is in order to best use it, you really, in the beginning too, just in the beginning, trade on the Japanese markets. So put it on the Nikkei, put it on, the Japanese yen pairs, like that, in the beginning, just so you could fully grasp and understand how it was designed and how it's used. That would be, it's not much of a con, but it's still just in the beginning. So when you transition it to, say, U.S. pairs or U.S. stocks or U.S. commodities, any discrepancies that you find, you'll know whether the discrepancy is because of Ichimoku or because of your charting or what. Basically, if it's going to be part of your business plan, you need to understand how it works. You don't just randomly throw stuff on your chart and start using it to run your Forex business. Okay? With that being said, I'm going to switch over here to my charts. And just give me a second here to fire this up. And while I'm firing it up, if you guys have any questions or comments, you can follow me on Twitter at BearForex. And you can email me directly at bearforex.com. Please feel free to visit my Patreon page if you'd like to donate and become part of our Essentials Club. All right, so we should fire up here in a couple of seconds. Well, that's taking a photo there, Dumbo. Sorry about that. One more second. I took a picture of my chart versus firing up my chart. All right. We should be live in 3, 2, 1, bam. Bam? There it is. Okay, here we go. Welcome to Ichimoku Kinko Hyo. We are currently looking at the USD JPY, and we are looking at the daily chart on Owanda, which is who my broker is. Now, again, I know what you're thinking. Look at how busy it looks, right? But it's not as bad as you think. Now, I'm going to start off over here. Now, this part of the cloud here is basically telling you that it should be coming down. Okay, see how this is all red here? So it's saying that the market should start trending downward. Now, all you have to do is if you grab, say, one of these lines here and just quickly, I agree. Well, the line agrees. It's a downtrend. The overall trend is midterm flat, longer term low, because you got a lower high. See, bam. Here's one. Here's two. Here's three. Here's four. So it is definitely trending down. Although this part here looks like it's just flat. But anyway, and then, but if you see this, Ichimoku's guessing long, right? Now, I never, honest to God, never really used this part. Never really cared about this. If you read how to officially trade it, you're supposed to pay attention to that, but I don't. Now, there's one part of this missing that I'm just going to pull up here, and I'll show you what it is. And I believe it's called the lagging line. Yeah, the lagging span line here. See that one. Now what that is, and right now it's in the middle of this cloud here, but what it does, this one right here, what it does is it tells you where price was, it tells you where price was 26 bars ago. And why they want you to do that, or why that's there, is to see, is the market higher or lower than 26 candles ago. If you're going short and the candle 26 candles ago was above your current candle, that's a good sign that the markets may continue to trend lower. If you're going short and 26 candles ago the candle is, wait, did I just screw that up? I forgot what I said already. Let's try that again. If price is higher 26 candles ago than it was right now, and you want to go short that's a good sign. If it's the opposite and you want to go short, that's a bad sign. And vice versa. If you want to go long and price is above, then above current price, that's not good. It should be below it. That way it says you're trending upward. Again, I don't use this line, so I'm going to get rid of it. I'm just trying to show you what was there. I just hid my 200. That's actually always on my chart, but I don't want to confuse you. So I usually remove this lagging line here. But I keep everything else. And what is everything else? Everything else is the clouds, which are these, and they have their own lines, which you can see here. They're actually separate entities. And then you have the baseline, which is this red one, and you have the conversion line, which is this blue one. And the way I did, and sometimes still do, this is I will trade whenever price breaks any of these. So I'm going to give you a few examples. I did not pre-think out these examples, so bear with me. We'll use this one because it's right here in front of me. All right. So we'll say price, we'll use this right here. Price closes under everything. It's closing under the green cloud. There is no red cloud. It's closing under the baseline and the conversion line. So I will go short right here, or I would go short right here, and I'd place my stop above the blue, which would be right here. Again, this is on a daily, so that's 300. Now, I always have a 3 times built-in target. I don't hit it that often because the market doesn't usually let me. But I do hit I put a 3 times target. So if I'm risking 300, my goal is to hit 9. Now I don't hit 9, but I follow this down along the blue until it gets taken out, which it would have got taken out right here 11 days later for probably like 220. Okay, so that's one way. See, and it happens over here too. So price closes above. Now in this case, okay, price closes above the blue and the red, so it closes above the trigger line, the conversion line and the baseline. Now my target for this though, again, so you don't know any of this is going to happen. My target is what I can see. So I would go long here, and I'd put my stop down here under this, so that's about 300. Again, it's just for security only. I super doubt it's going to get there. But where my goal is to hit this line here. Because price has a tendency to bounce off this line. It's only 100 pips away. Your risk to reward is wrong. No, it's not. My risk is defined. My reward is defined. But where the market goes, I have no clue. I have a risk set at 300 pips. I have a defined goal of 900 pips. But just because the market doesn't make it there doesn't mean anything. Now, my goal is to make some money. And if I believe that the market's going to hit this line right here, then that's where I'm going to put it. And that's where I do put it. And in this case, it would have reached its goal, and I would have made another 100 points. Okay, and it continues. I would have done the same thing here, right? I would have done the same thing here. Now, in this case, I would have went long here because it broke through all this stuff, right? So again, I would have taken a long here, set my stop underneath. That's 400. I would have had but this time, you can do it here or you can do it here. I don't really want it to get hit. I probably would have done it down there. Again, it's just about safety, and because it's a high-risk trade. And I'll tell you guys we'll talk about money management in another video on how much value these are. So 400 pips could be a lot or it could be a little. It just depends on the value. We'll talk about that in another time. But my goal would actually be to hit right around here someplace. Right around here. Because this was the last known place where it went. See? So I would have targeted that. Now, It would not have made it. It would have hit around here someplace. See, it's 1, 2, 3, 4. I probably would have closed right around here 3 times in the same area, net of 68, and that would have been it for that. So that's one way. Now, on the other way, let me see if I can find something here. The other way I like to trade, oh, here's a good grouping. So I will trade within the cloud, but only within it. So, for example, it would have ended up in a loss, but price closes inside the cloud, right here. So, for example, I would have taken a long here, in this case, right? Price closes above, I would have taken a long right here, and my target would have been here. Okay? In which case, it hit right here for 53 points. Right? Yeah, my stop would have been down here someplace, probably. Yeah, right here, about 100 away. So I would have hit right here, boom, I get it, right? 50. Now, I would have went long again here. Against all odds, everything's telling me don't, right? But I'm just telling you how I used to do it. So I would have went long here with this as my target. Now, because it's high risk, my stop would have been around right here, probably around 75 away. Because I know most likely it's not going to work, but I just would take it anyway. That's me. I don't know about what you're going to do. Now, yes, I would have got taken out. I would have lost that 75, but then I would have got back in here, and price would have taken me out right here around 62. So you can see how that works. Let me see if I can find one, a nice one that's actually in the cloud here. A nice one inside of a cloud. Yeah, there's not much inside of the clouds over here, is it? This one would have been too far in. Well, here's an example of once price broke out of the cloud, I would have went. So you see, if you see right here, see this right here? So price breaks through, it pops its head above the green. So it technically closes above. So it's above the green cloud, it's above the red, it's above the blue. I would have went along here and followed it up. May or may not have been taken out right here. I'm not exactly sure. Depends how far that spike pushed down. But you would have rode it all the way up here. See, like so. And then also in between each one, I would have traded as well. So I would have taken the short here, stop right here, goal is right here. Boom, it would have happened. Then again, short here, stop here, goal down here. Now, this is going to go against what some people say, but if you're going to do it with Ichimoku, your stop follows this. That way it actually gets hit. So, I mean, it wouldn't have mattered, honestly, because I would have been out of the trade before it got here. But, because in this case, you can see I would follow the blue and I would have been never in profit here. Yeah. I wouldn't have been in profit. No, maybe I would have hit it. Yeah, no. Because price never closed above the red. So, and my stop's all the way up here. Yeah, so I probably would have hit that. It's only 69, but whatever. Still trying to find a good example of inside the cloud here, guys. Here it is. Here's one. All right, here's a good one. All right. So, here we go again. In this scenario, again, in the past, I didn't wait for the crossover to happen. I waited for price to go above it. Because this happens and then this happens, see? I was always somebody who thought these are always lagging indicators. This happens days after this crossed over, and by then it would have been too late. See what I'm saying? So I would have went long here, right? With this as my target. But as it breaks down, the odds are less and less that it's going to hit your target. But I followed my target downward until it does hit it, in which it did right here. It hit. Okay, so now I'm waiting. Now it's just a waiting game where price finally closes above right here. It's above everything. So I go long here, stop is down here. This is my target, and I follow the target. Follow, follow, follow. Bam! It gets hit right here 13 days later for 198 points. Price is above everything. It clears the cloud. I'm going long again. Okay? I'm going to put my stop right here. And I'm going to follow along, follow along, follow along. I'm not over 50 points yet, so I'm just following along, following along. Finally above 50 right here. Price is moving along, moving along. It's only another 80. And then again, right here, I tested beforehand. Is this 50 points away? Yes, it is. I like to grab them by the 50s. So go short here, stop here, target here. Bam, done. Again, short here, stop here, gold down here. 1, 2, 3 times, fails, close out there. See, 3 times. And that's basically how I used to trade this. That's how I used to do it, you know. And I still do it like that now on the 4-hour chart. So you can see that there's different styles. But once you understand how Ichimoku works, it's not bad. It just takes some getting used to. And for people who like visual, who like to see things right away, it really does help you. I'm going to shut down this video. Give me 1 sec. It really does help you to find price targets. And it helps you as a trader because you can see, okay, get in here, get out here. It helps you to define your goals. I can already hear people bitching. Oh, man, you're risking so much for so little. But what is the difference? Just tell me, what is the difference between, let's say, Joe Schmo sets up his trade, and he's going long, and he's risking 100, and his goal is 200. Is he going to, no matter what, stay in that trade until it hits the 200? What if it doesn't? Is he going to give back all that money waiting? No. It's fine. I'm telling you, don't listen to whatever anybody else tells you. Just go do it yourself. Test out the theory. Okay? Just listen to what I'm telling you. It's okay to... Your stop loss is literally that. It's to stop the loss just in case. It's an insurance policy. You're going to close your trade before it hits that stop, if you're paying attention. And most of the time, you're not even going to hit your goal if it's really far away. I rarely do I hit my 3 times goal. Very rarely. I don't hit it that often. Sometimes there'll be huge swings in a market and it happens, but generally it doesn't happen. You close it when it looks like it's petering out. Okay? But as you can see, it can be a powerful and useful tool. Now, I know a couple of guys and one lovely South African lady. Hello, Anika. I will call you soon if you're listening. I know you better be because I send these to you every week. So I know you're watching. But anyway, they use Ichimoku Cloud to trade. Now, they adjust it or add or subtract things to fit their style. So Anika, for example, she does 4-hour and daily, using them both on a multi-chart system that she uses the 4-hour to get in and the daily chart to progress the trade. There's no right or wrong way. If you can figure out how to do it and how to make it work, then there you go. She actually is the one who put me on to using it for 4 hours, especially when it's choppy, to help kind of just visually see where everything is. So I do thank her for that. But yeah, there's nothing wrong with it. It works pretty well. It is not super popular in America in Western trading, although I think it should be. Especially, I like to use it when I train people, or used to train people. I got out of that game. But when I used to train people, I used to use Ichimoku as a good way to help people understand how the market moves. And a lot of people who learn how to use it early on in their trading career, they end up being pretty good with it. All right, we just hit the 35-minute mark. This is more than I wanted. So that's it for this video. If you have any questions, hit me up at Twitter at BearForex or email me direct at bearforextrading@gmail.com. Or if you like, you can visit my Patreon page, and if you're an Essentials Patreon member, you can give me a call at the posted number, and I'll get back to you when I can. The next topical video is going to be called Dissecting a Trade, where I'm going to talk about fees, spreads, commissions, finance charges, and everything associated with executing, maintaining, and closing your trade. Nothing to do with how you're actually trading, but the fees associated with it and how it's managed and the costs associated with such a thing. So, thanks for watching. I'll see you guys next time, and stay frosty.